It's another day to do business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Imi John Mekwa, and we have to start from where we normally start. And today, look at the price of oil. Yes, it seems things are escalating between the United States and Iran, and the price has gone to another level, $85.84 for Brent, 1.31% up for that. WTI, $80.22 after gaining more than 1% in trade. U.S. Central Command, they say that late Tuesday, the state side, that it had carried out another wave of strikes against Iran, targeting dozens of military assets near the Strait of Hormuz and along Iran's coastline in a 7-hour operation. The attacks involving fighter aircraft, drones, and naval vessels struck missiles and drone facilities. It also hit naval assets and coastal systems. And the operation started as U.S. forces resumed naval blockade on vessels traveling to and from Iranian ports earlier in the day. A subsequent social media statement by the Commander Brad Cooper, said that Iran had intentionally targeted civilians and attacked 7 commercial vessels over the previous week, leaving roughly a dozen crew members dead, missing, or injured. So it looks like we don't see an end to this, unfortunately, and of course that's spilling over to every economy in the world. Everybody is connected, including yourself and myself. Prices at the pump are threatened. Yesterday we told you of how Dangote is now pricing petrol in dollar because according to intelligence, as we are told, he's not getting enough from the domestic front, so he has to import. And if he's importing at this price. And so that's why we all pay for it. So this is not a Trump or Iran problem. It is the world's problem. And unfortunately, we all have to bear the brunt for it. Now, the federal government has granted Shell a tax credit of $11.5 per barrel under its fiscal incentive framework. It's a move that's aimed at unlocking an estimated $20 billion in new investment in Nigeria's oil and gas sector. The incentive is designed to encourage the development of key deepwater projects, boost crude oil production, and attract fresh capital into the country's upstream petroleum industry. Government officials say that the tax credit strengthens Nigeria's competitiveness in the global energy market by improving the commercial viability of major oil projects. They add that the investment is expected to create jobs, increase government revenue, support local content development, and enhance energy security. Let's see the market yesterday. We saw a positive close after the previous negative one. Almost 0.5% up is what the oil share index closed at, 0.46%. 242,870.44. The market cap is at 155.849. That's what it closed at yesterday. Volume and value closed positive, while deals reduced compared to what we had in the previous day. Let's see other parts of the market. We see top gainers yesterday. Learn Africa, First Holdco, and Thomas Ray. They were the top gainers. And on the flip side, Intelligence, Legend Internet, and FTG Insurance, they witnessed a lot of profit taking at the close of trade yesterday. And then do we have more from there? Yes, we do have top trades, First Holdco, GTCO, and Access. So some of them had profit taking at the close, especially Access. We saw that it had recovered to that 25 naira level, but since it has lost that yet again. The National Pension Commission, that's Pencom, says that it has cleared outstanding pension arrears of 957,000 retirees, marking a significant milestone in efforts to improve the welfare of pensioners across the country. The Commission also reports that total pension assets have increased by 51% to 31.5 trillion naira, reflecting sustained growth in Nigeria's contributed pension scheme and strong investment performance. Pencom says that the clearance of the arrears is part of ongoing reforms aimed at ensuring retirees receive their benefits promptly while strengthening confidence in the pension system. It adds that the larger asset base enhances the industry's capacity to meet future pension obligations and contribute to national economic development through long-term investments. And now to a bit of corporate. Corporate governance is becoming a very big issue in Nigeria, and the Chartered Institute of Directors believe that this should be the case. We should focus more on it, not just for the private sector, but also for the public sector.
State of Corporate Governance press conference by the Chartered Institute of Directors of Nigeria is ahead of the main event. It is made up of mostly the executive of the institute and journalists. The plan is to whet the appetite of all concerned for the biannual event. It will be the first on governance health check.
We are not simply releasing another report. We are presenting an objective assessment of Nigeria's current standing, drawing on extensive research and credible global, regional, and national sources. More importantly, we are identifying practical pathways to strengthen governance in both the public and private sectors.
We should have more interest, indeed, in how our corporate and our public businesses are run. We should interrogate the numbers. Fortunately, NNPC is beginning to publish their results. But there are many other companies whose operations are so opaque. We need to ask questions, challenge, because we need to unlock the value in those businesses.
There are other topics for discussion.
Succession planning is also another area where corporate boards and organizations need to look at to mandate executive succession as a permanent agenda item.
The statistics on SMEs, and where we are as a nation concerning that, I think is a very important one. And I think also to focus also on messaging the positives, not just the challenges that we're all witnessing. Of course, we want all the problems to be solved.
CIOD insists that strong governance is no longer a competitive advantage. It's a prerequisite for long-term success, and so it must be intentionally pursued.
welcome back. It's still Business Morning here on Channels Television. Let's discuss a bit of the corporate. Outside making money, their corporate social responsibility. We have two big companies this morning telling us about what they're doing and what they intend to do even more. They're planning for the Africa Social Impact Summit. And those companies are represented here by the Chief Executive Officer of Sterling One Foundation, Olakpeju Ibekwe. Good morning.
Good morning.
Welcome. That's one big company. Then the second big company is represented by the Director of External Affairs and Social Performance, Seplat Energy, Choma Afe.
Hello,
You're welcome.
Good morning.
Good to have you both. It's a ladies' affair. Yeah, whenever we have ladies together, we always try to have as much fun as possible, even though we are working, and of course that is important. But so let's start with what this is about, Africa Social Impact Summit. So it suggests social corporate responsibility and all that. But let me start. This is your father. What is it about? What do you do? What have you been doing?
So the Africa Social Impact Summit is a platform curated and co-convened by Sterling One Foundation, the United Nations system in Nigeria, and the Federal Ministry of Budget and Economic Planning. And here's why. We have realized that the unique challenges facing not just Nigeria but the continent of Africa needs more than siloed responses. More than ever before, it's time for us to see how we can collaborate and leverage our different strengths, synergize, and see how we can scale impact significantly in view of the 2030 deadline of the Sustainable Development Goals. We already know as we speak we're about less than 6% on track, and there is still a lot of work to do. It is not just an issue of one organization working alone. That's why I'm really glad one of our partners is here. We have realized that it is time for us to see how we can work together. So this platform was midwifed in 2022, just after we started recovering from the very, very terrible impact COVID had, not just on Nigeria or Africa, but
Globally,
across the globe. And that time caused different development organizations to start rethinking development assistance. So today you find that international development assistance has been reprioritized and the international funds are dwindling. So this platform started with about 8 partners in 2022. Today, we're proud to say that we have over 60 partners trying to see how we can work together to solve our common challenges. The platform seeks to achieve 3 main objectives. Number 1, catalyze multi-sectoral, multi-level partnerships across the public sector, the private sector, and the development ecosystem. It also seeks to attract impact investment into scalable solutions across critical sectors, and finally advocate for the right policies. And we are proud to say this, so far this platform has unlocked over $1 billion and has facilitated several partnerships, too numerous to count. So it is already delivering on its remit, and now more than ever we're inviting other private sector organizations to see how we can come on board. So the summit this year is happening in July 22 to 24, just next week at the Eco Convention Center, Lagos, Nigeria. And we are coming with our unique, wonderful leading partners choosing to take the bullet to ensure that
I feel the fire. If it coming, do you feel it? Oh,
to see how we can scale impact significantly, because working alone is old money.
So let me just ask you there, and I'm glad that you can proudly say you have scaled through, you have about 60 partners and everything, but I know that in the corporate world there's also competition. So this is one barrier that I think you would have had to deal with. How do you handle that and some other barriers in bringing sometimes companies in the same sector together?
So I would say that what we're trying to promote is co-opetition. No longer competition. Co-opetition. Companies are interested in ensuring they can continue delivering value to their shareholders. And that is the only way they can remain sustainable. However, when it comes to common issues, for example, security, if there's a security challenge in this environment, it doesn't respect whether you are competing organizations or whether you are private sector or public sector. Everyone is at risk. So why not come together to solve these common challenges? For example, education. It has gone beyond just sending children to school to become a security risk. Why don't we come together to solve this common challenge? Because if we do that together, we all benefit.
So, Choma, education concerns SEPLAT. I think you're really interested in that.
Yes.
And I guess that's one of the hooks she used to catch you on.
Yes.
So tell us what you've been doing, what you hope to see being a part of this platform.
So I think in terms of capturing, we're willing. You didn't have to be captured. Okay. So I think the way we see education at SEPLAT is that I'll go back to our corporate strategy. When we revamped and reviewed our corporate strategy about 6 years ago, we looked at two key pillars, and those two key pillars was one, a sustainable business, building a sustainable business, and the second was delivering on energy transition, which is at the heart of our business. But sustainability and a sustainable business is at the core of our strategy, and we've unpacked it in a few ways. One of those ways is social development, and within social development, education is primary. So within our social development projects, we've got access to energy, we've got youth empowerment, we've got healthcare, and we've got education. And the way we see education at SEPLAT is that it's probably the most important investment we can have, because it cuts across everything we're interested in. She spoke about sustainability of businesses and going forward. As a nation, education is a priority, to me, number one priority, because it not only empowers for the future and gives the generation today what they can look forward to tomorrow, but ultimately it cuts across issues like security, it cuts across culture, religion. It's able to galvanize a whole system and build the future that Nigeria needs. And for SEPLAT, when we say that we want to be a sustainable business, without education, without the young people being truly empowered across the education ecosystem, one of the things Peju spoke about when she said coming together as various organizations, bringing your wealth of experiences, we found that with investing in education, we first started 12, 13 odd years ago saying we wanted to do the Pearls quiz, it's an academic quiz, because we looked at the intelligence level of children in our local communities. They are unable to pass exams to move forward. So that was just one. But when we started that, it galvanized other issues started coming up. You found out that the teachers needed help. You found out the curriculum needed to be worked on. You found out that the ministries of education in the various local governments that we went to needed help. They needed to
do collaborate with the government.
Yes, we do collaborate with the government in the various areas of operation where we find that Edo State, Delta State, Imo State, and now we're going into Akwa Ibom State.
Can you give me like an example of one of those projects you have done?
Yeah, happily. So first of all, we have what we call the Pearls Quiz. The Pearls Quiz is targeted at secondary school children, senior secondary school children, Edo, Delta, Imo State. And it's an academic quiz that we start from assessments, tests, and so on in STEAM. The beauty about it is that everybody talks STEM. We believe in the creativity. So we actually do economics, there's English, and then we have all the other science subjects, right? And those quizzes are to task them academically. Then we have the Teachers Empowerment Program, STEP. As an outcome of what we saw in the Pearls quiz, we realized we're teaching the children, but we're not helping the teachers. So we have a Teachers Empowerment Program, which is about 5 years old, 6 years old now, going to the 6th year. And so far we have done well over 1,500 individual teachers between Edo State and Delta State. We've now moved into Owerri.
Do you focus on the Niger Delta area?
Because of where we operate. Okay. So where we actually have, correct. So we reinvest in the communities where we have our operation for now. And that takes me back to why we are actually partnering with ACES, is because that platform is national. So the impact, the education, the intervention, the opportunities to share some of these things that we do nationally and potentially across Africa, ACES gives us that platform.
You know, and I'm intrigued that you mentioned creativity, because being an oil and gas company, a lot of people will think, then your education and empowerment skills acquisition, would maybe focus more on oil and gas. But I guess that's not what you're doing.
No, so what we've decided, and we looked at how children are learning now. And when we went to school, everybody said STEM. And it's fine, and it's great. I'm a graduate of English, so I'm clearly not that person. But you find that children learn by hands-on experience, and that's where the creativity spark comes through. And so one of the things we did in our local communities was the STEAM labs. So that sparks innovation. There are labs set up, online access, robotics, painting, woodwork, all kinds of things that the children can develop solutions, real solutions for the challenges they experience within their environment. And so those STEAM labs and that learning, which is kind of where the world is going now, sparks the creativity. So even the science students suddenly have an interest in art because it's another way of expressing themselves and expressing their view of the world at the end of the day.
All right, Mark, you mentioned an amount of money that you have been able to unlock, and money is everybody's. And recently on the continent, not just in Nigeria, the talks about unlocking private capital is a big conversation that's going on. And for you to be able to do this in Nigeria, I guess that's applaudable. But then some will say, how impactful, has this huge capital that you have unlocked, how impactful has it been? Who feels it? Who's appreciating that impact of the capital?
Thank you very much. And impact is, it's Africa's social impact.
Exactly.
Anyway, so you find that there are different types of partnerships. I will give you one example of the capital that was unlocked just from last year's conversation. I call it a conversation because it is more than an event. It's an implementation platform, actually. So one of our partners, the ECOWAS Small Business Coalition, signed a $2 million contract, MOU, with InnoPower. And based on that partnership alone, 12,500 SMEs across West African states have benefited, with about 100,000 people within these countries. So we're not talking about just impact within Nigeria. We're talking about impact across the sub-region. That is one example of impact numbers. We also have a partnership with MTN Foundation and Private Sector Health Alliance of Nigeria. So interestingly, Private Sector Health Alliance of Nigeria and the MTN Foundation have started speaking, but in the 2023 edition of the conference, the health panel was supported, private sector support by MTN Foundation, and then Private Sector Health Alliance of Nigeria was the NGO partner, technical partner on that panel. After that conversation, they eventually did sign an MOU. And I say this because partnerships do not just happen. At times it takes time. Different organizations do their due diligence to be ensured, because partnerships have to be around shared values, shared goals, and then we find a point of alignment on, and then the implementation framework that works for both parties. And this takes some time. And that MOU was signed. MTN Foundation invested over 3 billion naira, and that has supported the renovation of over 50 primary healthcare centers across different states in Nigeria. I don't want to go into the details of how many women were able to give birth with lights, without candles. I don't want to go into all those other details of how many children were immunized at those primary healthcare centers. The impact is massive.
And we're expecting more.
I've only given you 2 examples of partnerships. As we speak, Plan International and Sahara Group are in Kano setting up a platform for youth and girls from the Africa Social Impact Summit last year. So these impact stories are enormous. For us, it helps us know the reason why we have to continue and stay this course, because I assure you there are challenges, but it's these impact numbers lets us know that if this platform does not exist, these partnerships would not have happened. This impact would not have happened. In some cases, in not all cases, in some cases, because some of these partners met themselves at ACES. Some of them are, both of them are actually partners on this platform.
So we're expecting more partnerships.
Of course, we are expecting more partnerships. It has basically like tripled or quadrupled over the years, and we're looking forward to more this year.
So what can we expect apart from the partnership? What's the lineup for? It's next week, yes?
Yes.
What's the lineup? What are we expecting? Yes, we're expecting more MOUs and partnerships. But what else?
Of course, we're expecting more financing. The theme is financing.
That's at the core of it.
Yes. The theme is financing for development. And that speaks to the impact you mentioned. It's not just financing, because we have also learned that we don't throw money at problems. At times we throw money at some problems, you worsen the problems. So we're expecting the public sector, we're expecting the Minister of Budget and Economic Planning, who is our co-convener, we're expecting the representative of the United Nations system, who are also co-conveners, we're expecting the private sector, one of them is in this room with us right now, we're expecting philanthropists, and we're expecting the civil society in the room. Today, the Africa Social Impact Summit is the largest development platform that exists in West Africa that is hosted in Nigeria today. So everyone, private sector, public sector, development partner that is interested, and development finance institutions that are interested in working together with partners. The place to be is at the Africa Social Impact Summit, July 22 to 24 at the ECO Convention Center. We have three events. So we have bold action session on education, where we bring together commissioners of education from across different subnationals to work together with the private sector, where they are co-creating solutions and how they can support these subnationals. These are three events that are happening on the 21st. We also have a unique session called the Bold Actions on Health, where we bring together the public sector, the private sector, and the players within the sector, within Nigeria and across the continent, to also solve for financing, because health sector needs more and more financing in view of some of the things that happened last year. I don't want to go into the details of that. Then we have the main event. We have the workshop for the NGOs. We have Europe, Africa in financing opportunities, and we're proud to do that with the Impact Fund Denmark. We have an excellent session for philanthropists. We're proud to do that with the Rockefeller Philanthropy Advisors, the Ford Foundation, the MacArthur Foundation. The list goes on. We also have our private patrol of strategic partners, Coca-Cola. They've been with us from the very first year and have been consistent in prioritizing sustainability, access to clean water. We're really proud and humbled by the partners that we're working with, and we're looking forward to more, because there is no better time than now for us to see how we can work together like an indivisible army to attack the challenges that are facing us.
I can see that if we leave Olakpeju,
She's going to just keep going.
let's just have final words from you, Choma. So what's the plan bringing, or what are you taking to the summit next week?
Okay, so we are leading the charge when it comes to education, because again, for us, that's our focus area. We do intervene in our communities in education, access to energy, youth empowerment, and healthcare. But for this summit, our focus is education, and what we hope will come out of this summit for us is new partnerships, but moving from conversations to action. Like she said. So one thing is to put your money on the table, but let your money speak. And it must speak in a way that is truly sustainable, truly driving impact, and going right down to the last man in the communities in Nigeria and hopefully across Africa.
We surely do need those real conversations and real action to make impact. Thank you so much, ladies.
Pleasure.
Whenever ladies are involved, you always expect to see results.
You didn't ask me for how people can join us.
Oh, okay. How can people join you?
So
you're taking so much time.
So partners that are watching that want to join us can go to theimpactsummit.org.
Could you say that slowly?
theimpactsummit.org. theimpactsummit.org. to register. Human resource professionals can also register their teams. We're having a unique session with Lagos Business Sustainability Center, and we have speakers including the African Finance Corporation speaking to us on how we can leverage ESG for
you have to register before you can attend.
Yes, yes, you have to register. We have to get your records and be prepared to host you. So it's a really beautiful masterclass. And I think I'll stop there.
Okay, thank you. Olapeju Bekono, passionate about what she's doing, the Chief Executive Officer of Sterling One Foundation, and also Choma Afe is the Director, External Affairs and Social Performance at Seplat Energy. Thank you, ladies.
You're welcome.
And well done. Thank you. Let's take a break. When we come back, we have another conversation for you here in the program. Please stay with us. Let's talk about e-invoicing, but it's not a conversation. We know for the big taxpayers, the deadline was June 30. That's ended. So Digitax, they think that it's time to assess the adoption so far. And also NRS, they're sharing what they have observed in the first 6 months of this new tax reform, especially for the big taxpayers, and what businesses should be doing at this time.
Corporates are still adjusting to Nigeria's new tax law, and so Digitax gathers business leaders to assess the state of e-invoicing readiness and what the Nigeria Revenue Service mandate means for businesses.
Can you move to the next slide?
The project lead of e-invoicing at the Nigeria Revenue Service, Mr. Mohammed Bawa, joins virtually and shares progress on adoption and compliance so far, especially since the June 30 deadline for marked taxpayers has elapsed.
So despite our achievement to the tax administration 2.0, especially the tax pro-maps, which most of you are familiar with, and now Ref 360, we still have many of our potential taxpayers that do not pay taxes. Right, and then those that pay also currently underpay. Underpayment can come from suppression of their turnover. We also have that agents not fully remitting to the NRS. We also have taxpayers overclaiming impute VAT, overestimating their expenses. All these things are responsible for, revenue leakages within the NRS.
The meeting then takes some time to highlight benefits of adoption.
There are direct benefits to businesses that are e-invoicing compliant that we have in Nigeria that have nothing to do even with the NRS. Even your own business processes are just a lot more seamless when you adopt the e-invoicing infrastructure. Your refunds claims are a lot easier. Your filing is also a lot easier because you already have a list of all the invoices that you generated and all the transactions, all of the details, what are the amounts on those transactions, what are the VATs that apply, how all of these things fit into the invoice. All of these are available on the invoicing policy and they fit into what you need for your filing. So it's a lot more seamless just to do your filings as well. Also, your VAT inputs are also easier to claim because there's audit trail and documentation for every single transaction that you carried out. So it's easy to then say this is how much we need to claim in VAT inputs and this is how much we have paid and this is how much we have received and as such be able to net it off a lot easily.
Experts say e-invoicing would standardize invoice formats nationwide using globally recognized invoice schemes and improve efficiency for businesses and tax authorities.
Determine the difference between your current schema. The schema is your invoice structure and what the government has specified, and through your system integrator, standardize that invoice, create your invoice, transmit through your access point provider, and you become compliant.
NRS has notified businesses that medium taxpayers are expected to begin compliance in the third quarter of 2026, while onboarding of emerging taxpayers would commence in 2027.
All right, that's the e-invoicing, the tax reform, and everyone is adjusting to it. But now we are in the second half of the year, and we've seen, it's supposed to be mixed color for the first half, But when you calculate, especially from the markets, we won some great strides. We made some great strides in the first half. We saw how the Nigerian stock market overtook South Korea when it comes to the returns on investment. Nigeria was the highest in dollar term globally, so that's worth celebrating. But what can we expect as the trend for the second half? We have joining us here in the studio investment research analyst from Afrinvest West Africa, Mr. Nathaniel Disu. Mr. Disu, good morning. So let me try a bit. How much did you make in the first So we heard that the NGS gave about 64% returns on investment in the first half, in dollar terms for that matter, not even in naira terms. A good one, even though towards the end it didn't look that way, it didn't feel that way. Even up to now we're trying to understand. But what can we expect for this second half, and what are some of those drivers that you see?
Okay, thank you very much for asking. And one of the things, before we find out what to expect in the second half of the year, we should have an understanding of what happened in the first half of the year. And like you rightly said, I think about a few days ago, I think last week, it was actually announced that Nigerian stock market was the best performing in terms of dollar terms, and that indicates the resilience of the Nigerian stock market despite the macroeconomic challenges. We still see that Nigerian stock market continues to perform, and one of the drivers so far has been stable macroeconomic dynamics. We see the exchange rate, which is the major factor in dollar terms. Naira has appreciated about 4.5% thereabout in the first half of the year, and we also saw how resilient corporate earnings also played into the market. So those are the things that has driven the Nigerian stock market momentum. As a matter of fact, in Afrinvest projection for the entire 2026, we actually projected that the market would return about 14.5% in the whole of 2026, but just within the first half of the year it has already outperformed that target, and we see that trend still going into the second half of the year, and it's a good thing for the market.
So the second half can be kind of dicey. In fact, some people say people have started shopping for Christmas, especially because we have politics. That's the big headline and everything. Do we expect disruptions from those areas?
So we don't really expect much disruptions, and that's why in the second half of the year we actually did a scenario analysis on what to expect in the bull case scenario, in the bear case scenario, and in the base case scenario. But on the base case, we expect that the market should return about 62.5%.
As in, are you talking about for the whole year, for the second half?
Yes, for the whole year.
No, but we have already done 64%.
No, we've done about
in the first half.
In the first half, its market ended about 47%. So as of April, it was.
You're talking about the market movement.
Yes, so the market movement, but we don't really expect much of pre-election jitter that would really affect the market, because I think one of the reasons is that so far we've seen a bit of stable macroeconomic dynamics, and the three main forerunners for the election are still those that we like to contested in the last year. So we are still kind of seeing the same trend happen, and there are a lot of positive drivers in the market in the second half of the year that should still suppress any pre-election.
But let's also not forget that one of the drivers of that positive outcome in the first half, you have reforms like in the pensions, which drove that positive movement. We don't have that in the second half, except we want to replace that with the IPO.
That's a big one, because if you look at the size, at the expected market capitalization size that will come in due to the Dangote Refinery IPO, that's also one of the main drivers that is supporting this bullish momentum. And also the FTSE Russell Index reclassification.
We're still waiting for that. And the S&P also.
Yes, although S&P own is for 2027, that is more like a watch list. And I think a few days ago it was also reported that a delegation from the NGX.
They've not told us what they did.
I think one of the things that we're seeing is that the NGX and the SEC as a whole, they are ready to cooperate with international investors. So the T+1 classification isn't really a bad thing on its own.
Is there a possibility to go back to T+2?
I don't think we would go back.
Because
if you should go back, it's giving a sense of
uncertainty,
uncertainty, and that's what the market doesn't want. The market doesn't want uncertainty. So the T+1 on its own is not a bad thing. So it's just about how can they parley and work with foreign investors to find a middle ground, and I think that's the reason why we saw that NGS delegation go over in London to meet and say, okay, how can we structure this to make things work? Because for the local side, on the domestic domestic front, T+1 is actually good for us because you make a transaction.
Yes, developed markets are using T+1.
Yes, so because at that side, for example, in the US, UK, they actually trade in dollars, so there's no need of any much conversion and everything. So I think that's the issue that needs to be flushed out. So when they can come to a consensus, I don't think there should be much.
So do you think we're overestimating the impact of the Dangote refinery? Because since all eyes are there, when the market was bleeding, a lot of people say, investors are taking out funds for the IPO, which is in September, and all of that. Are we overestimating or over-expecting the impact of the IPO?
So the Dangote refinery IPO, it's more like a double-edged sword, and that's one of the things that drove the bearish sentiment that we saw in June, because the IPO, the money that would come in for the IPO is not going to come out of thin air. So that's why we see a lot of big investors are doing what we call, let's say, sector rotation or funds rotation. So they rotate out of some major stock listings and to raise funds for the Dangote refinery IPO. So while that would come in, some stocks might actually suffer in the short term because people would want to reallocate funds to the IPO, and that's one of the things that drove the market bearish in June, especially when the private placement came around middle of June. We saw investors trying to get
taking out funds from
so
for that.
It's a two-edged sword.
So when the funds eventually come in, hopefully, can we expect a lot of change in the market? Especially since that some of them will be recycled funds.
Yes, so one of the things that we expect would happen for that Dangote refinery IPO is that while some would tend to reallocate funds from other, there are also some investors that will actually put in fresh funds, like even the retail investors. Everybody wants to get a piece of the pie, and if you look at the private equity valuation of Dangote refinery, currently is about $40 to $50 billion. So by the time the IPO would come in, we will convert that to naira terms. By the time the IPO should actually get, it won't be like it would
market cap.
Yes, so the market cap, it would really be high. So that's one of the things that we expect to drive the positive sentiment in the market, and it also unlock fresh capital.
All right. Okay. We'll keep our eyes on that and other issues. Thank you so much, Mr. Nathaniel Disu, investment research analyst from Afinvest West Africa.
Thank you very much. Thank you.
Time to go global with Ladu Williams.
Going global now, artificial intelligence continues to reshape the global technology landscape, and one of its biggest beneficiaries is seeing the rewards right now. Dutch semiconductor equipment giant ASML, they delivered a stronger than expected second quarter earnings and raised their full year forecast as surging demand for AI chips. That's fueling investment across the semiconductor industry. The company reported higher sales and profit than analysts had expected, while signaling confidence in sustained growth despite ongoing export restrictions. The results underscore how the AI boom is driving the next wave of expansion in the global chip-making ecosystem. So we see net sales there at 9.3 billion euros, beating estimates of 8.8 billion, and net profits that hit 2.9 billion euros, beating the 2.6 billion euro estimate there. And to digital assets, Bitcoin is back on the front foot, but caution is still dominating the crypto market. The world's largest cryptocurrency climbed back towards the $65,000 mark after softer than expected U.S. inflation data eased concerns over another Federal Reserve rate hike. However, the rally is being tempered by renewed geopolitical tensions in the Middle East as the escalating U.S.-Iran conflict continues to unsettle global financial markets. While improving inflation has boosted appetite for risk assets, investors remain wary that higher oil prices and persistent uncertainty could keep volatility elevated across the cryptocurrency market. All right, let's see how markets fared in the U.S. Yesterday with our U.S. correspondent, Maria Bird. Take a listen.
Positive signs on Tuesday as the S&P 500 was up at 0.4%, the Dow Jones was flatlined, and the heavy tech Nasdaq was up at 0.9%. As many investors were also surprised to see the U.S. inflation report for the month of June, which was much cooler than expected. It's also clear that many investors are wanting to see the AI industry recalibration, which is showing a positive insight for the U.S. stock market. Even though oil prices are creeping up due to the U.S.-Iran war, it has not had a dramatic impact on the U.S. stock market.
Thanks, Maria. Well, still in the U.S., despite lingering concerns over U.S. debt and trade policy, global investors are still pouring money into American financial markets. New Treasury data shows foreign investors made a net purchase of $132 billion in U.S. securities in May, driven by robust demand for equities and corporate bonds. The strong inflows suggest overseas investors remain confident in the resilience of the U.S. economy and the earnings outlook for corporate America, even as they trimmed holdings of short-term Treasury bills and uncertainty towards inflation at this point. And yesterday was hot for U.S. markets and the economy. We had the CPI data coming in below expectations, big earnings, and the latest Fed Chair, Kevin Walsh, his testimony at Congress. Joining me now, Isaac Marshall, Senior Investor at TLG Capital. Great to have you, Isaac. Good morning.
Good to see you again, Marty. How you doing?
Good to see you too. I'm doing great. So, looking at the bank earnings, they beat expectations, and looking at their equities trading alone, looking at the likes of JP Morgan Chase, and most of the big banks, they beat expectations. They could show me the numbers. They're at $6 billion. That's what they made from trading equities. That's the revenue there, the second quarter of 2026. Estimated was $4 billion. That's for JP Morgan. Goldman Sachs, they made $7.4 billion. Expecting of $5 billion, beating that. Citigroup, $2.3 billion. Bank of America, $3.6 billion. What is this telling us about the American economy so far, looking at the earnings, even with revenue and earnings per share?
100%. I mean, look, it's crazy because I think if you look at the numbers, Goldman basically doubled their earnings in the last year based on the last quarter's data. JP Morgan's up 40% year on year. Bank of America had the highest revenue in the last decade. So I think it's a really, really strong quarter for banking. What that really tells you is just that the demand in the market is the tone of the market, I should say, is excitement, right? I think with the build out of AI CapEx, with sort of jobs numbers looking stable, with economic growth sort of looking punchy, inflation data came out, on the softer side, so leaving folks less expected of an upcoming rate hike. I think just generally the economy looks really resilient in the United States, and so the consequences that the banks have seen a huge amount of deal flow, a huge amount of deal volume. Obviously, SpaceX IPO made all the news and everyone was talking about it, and that's going to make a massive boost, to your point, on equity trading revenue. But what's crazy is that if you look at JP Morgan, for example, the entire bank is up, right? Every single division of the bank is performing stronger, and I think it's just a testament to the fact that right now there's a lot of excitement in the United States, and as long as there's that ebullience, plus you have the volatility from the war, banks are going to make money on that.
Yeah, I guess the banks win regardless, looking at the earnings there. Then new Fed Chair, Kevin Walsh, he spoke yesterday. Let's get a snippet of his testimony at Congress.
Donald Trump? Yes or no?
If I'm permitted to say, we're an independent central bank. We're honored to be independent. Our independence came from you.
Okay, that's enough. Thank you. What steps would you take if the president or others in the administration target you or your fellow governors because he doesn't like how many of them are voting on interest rate policy?
So it's not my intuition to engage in hypotheticals, but I'll tell you this: the Supreme Court said
that's an easy way out.
The Supreme Court said that the Federal Reserve and the conduct of monetary policy is independent. To the extent there were questions about it, the courts answered those questions.
So what would you do?
I would continue to do my job.
All right, Isaac, so you have the Fed chair there. He's saying he's independent regardless. The Fed remains independent, even though we know President Donald Trump pushed for his appointment. So do you think markets were confident from what they heard yesterday?
I think so. I mean, the interesting thing about Warsh from the very beginning is that he has had a sort of two key elements. One is, I think, a degree of inflation focus, of what you would call hawkishness in sort of the way that he communicates. So I think one of the things that he notably said in the testimony yesterday is just flagging the fact that the most important thing is making sure that the inflation over the past 5 years that we've seen in the U.S. markets, and as a result have seen in kind of U.S. dollar assets, is a thing of the past. But the second element that I think is really interesting is the fact that he just has not been casting votes on the dot plot. And I think his general point is that, look, when the Federal Reserve casts these votes and signals this dot plot to the market, it actually results in the market processing economic data to a lower degree because people just come to rely on the dot plot to understand the forward direction of monetary policy. And his point is that, look, the Fed is data dependent and the market should be data dependent. And I think the basic signal that you're going to see here is I do think that, you know, as much as inflation softened, you know, rate hike expectations in September basically fell from about 75% to 63%, right? So the markets are still kind of pricing a probability of hike this year with decent odds. And given the way the Fed talked, I think that they are quite serious about reining in inflation. I think that if you do continue to have a conflict in the Middle East, which I think is likely, I don't see this as a situation that's just resolving overnight. I think that does continue to flow through into some inflation, but I think the most important thing, which is, as Warsh said himself, the long-term inflation is always monetary policy. And I think that you have a Fed here that's clearly communicating that they want to get inflation under control. And I think you'll probably see rates hold or hike in that direction.
All right, I guess investors will keep watching at this point to see if we get maybe a cut again sometime, hopefully soon. Thank you so much, Isaac Marshall, senior investor, TLG Capital. Thank you so much.
Take care, buddy. Thank you.
All right, that's it. That's all we have for you for the global economy. Back to you, Nick.
Thank you, Ladi. And heading to the markets now, we see recovery or sustained recovery from yesterday. 0.31% in the green is what the all-share index is at this time. 242,499.73. We see First Holdco still retaining the positive sentiment. Stanbic joins the group. Jaiz Bank also positive this morning. Custodian Alliance, Cadbury, Averia Green, Living Trust Mortgage Bank also positive this morning. On the flip side, we have Premier Paint. Premier Paint is seeing some positive, some profit taking. Dangote Cement as well, and Zenith Bank, they have red colors in early trade. But you have latest numbers from intraday at 1:30 during Business Incorporated. Ladi Williams will be back to give you updated on that. I'm Amy John McMahon. I wish you the best of the rest of the day.